How's our Tesla gap fill play going? Remember, we almost got out here, but it didn't break out above the highs of the day. Look at what it's done. Getting pretty close. Sitting on the 20 moving average on the intraday chart. This is one where now I start using things like this right here. Well, nice breakout on that, you said. Tesla. So now I want to focus on the 1 and the 5 minute chart. Stock's still going lower. I want to watch to see what the stock does when it reaches the previous day's closing price, which we're there right now. So I want to watch that 1 minute chart and then have my option up ready to go, up 1,800 bucks on that. Turn this into a 1 minute chart. I start to see a little bit of a bounce here. I'll take half the position off the table on the gap reversal. Put some money in the bank. Now I'll turn this back into a 5 minute chart and watch to see what the stock does here. Stock bounces back above the 20 moving average, I'm out. If it doesn't, it keeps going, then I'll just go ahead and stay with the position. So there you go. There's Tesla. Nice little gap fill play. I love that it came down, rallied, but did not rally above our stop. Kept us in the trade, and now we can start to shave some of the profit off of it. Very well played, very well executed. One of the things that I've been talking about in the live events, I'll be talking about in Vegas here this week, is the importance for you to focus on execution. Execution is where the money is made. Okay, profit does not come from consistently from being lucky or throwing crap against the wall or just taking a gamble on things with no risk management, no probability. Execution is what we want. And so this was a very well executed play. We found the daily chart. We found that on the daily chart the stock had gapped against its trend, that it was part of a potential falling 3-method candlestick pattern. So we had a bearish pattern on a bearish stock that gapped bullish, giving us the best, highest probability for taking a put play. Bought puts, set a stop, watched the chart, hit our alert, evaluated the chart, did not exit, and just completed the original purpose for the trade, which was the gap fill, took half our position off, and now we're letting the other half run a little bit here to see if we can go lower and get some more follow through to that falling 3. Brian says, I focus on execution. Brian says, I'm not bragging, but I nailed that Tesla play. I am pumped as always. Chad says, absolutely. Do I want to be right or do I want to make money? Who knows where it goes from here? Exactly. So again, guys, the money's nice. I mean, this one's a couple $1,000s in a day. Yeah, I mean, if you do that every day, you're doing okay. It's not the money. The money in this case, the money on this trade is coming from good execution. This is a good trade, not because of the money that's being made. It's paper trading money, right? You can't spend it anyway. If it was a real trade, the money is nice, but it's not the reason for the trade. It's not why we trade. We trade for that execution. We trade to try to nail down that perfect execution. Extremely well played. Okay, and that's what's important. I focus on execution. I am a disciplined, focused, competent, skilled trader because I focus on execution and not on profit. I am a money magnet, exactly. Okay, so I wanted to hit that before we go talk about Goldman Sachs and say, okay, this, guys, right here, this is what you need to be shooting for. Nailing the entry, right? First 5-minute candlestick, we broke below it, we got in. It was a beautiful entry. The daily chart lined up perfectly. Came up, almost hit our stop. We evaluated it, let the 5-minute rule take over. 5-minute rule kept us in the trade. The stock continued to break down. Come back, revisit the trade. Lo and behold, we're at now our goal on this. The whole reason for doing the trade was a gap fill. Okay, and again, I mean, I just can't say it enough, and I can't stress it enough. This is what you're looking for when you trade. This right here, the last hour, okay, really the last 40 minutes. This is what you should be striving for. This is what you should be shooting for. Not necessarily the strategy and not the stock for sure, but the execution of a strategy that is near perfect execution. Near perfect execution creates the desired result. But what most people do is they go out and they chase the desired result with, excuse the French, but half-assed execution. It's not going to happen. And if it happens, you're going to get lucky. It'll happen once or twice, and then you'll go broke the rest of the time. It's execution that has to be the goal. Profit is a byproduct of good trading. We come in this morning, we're whipping through the charts, and I'm like, okay, Tesla looks like they're going to gap up to the 5-moving average. And right away, I'm like, there it is. That's it. That is the chart that I've been looking for. That is what I wanted to see when I was looking through charts last night. If this stock can gap up near moving average, this is one that is moving down. It is trending lower. It would be a gap against the trend, and there's a possibility we're going to get it because of the candlestick that we had yesterday. And if it gaps against the trend and stays inside of this candlestick, that's going to be a potential falling 3. We look for the gap fill, and we enter the trade at just the right time. We manage it with the right stop. We use the 5-minute rule to stay in, and we end up exiting half the position right now at a perfect exit on a fill of the gap. Perfect entry based off the perfect chart interpretation with a perfect exit. I could give a crap how much I make on it. I don't care if I made like, $10. That's not what's important to me. What's important is the execution, because if the execution is right, the profit comes from it. Jose says, yep, that's the path. Perfect execution. Jenny says, love it. Awesome. This is good stuff, guys. This right here, this is gold. You guys go back and watch the archive on this, because I'll tell you, one of the things that I love about what I do, love and hate, right, at the same time, is that there is no, woulda, coulda, shoulda here. There is no, we'll talk about trades that we missed, go back and evaluate them so that, if the situation shows up again, we don't miss them. But there's no way for me to BS this. There's no way for me to, oh, well, we could have got in right here at the very tippy top, and then we could have got it out right down here at the very tippy. Bull crap, right? You guys see it here, the emotion that's involved with when do I execute, what option do I select, what strategy am I looking for, what is the goal, what is the daily chart telling me, all of these things coming together, and then having it actually challenge our position, hit our alert, oh crap, we got to go back and look. Well, let's give it the 5-minute rule. No, it looks like it's going back. So we go away from it again, and then it gets down here. Now we're at our exit, and we take the trade off. That is what this is all about. And I don't care if it's a day trade, a swing trade, a trend trade. It is all about execution, picking the right strategy on the right chart at the right time, managing risk. That's what this is all about. Taking high probability trades based off of your probabilities are going to be based off the charts, executing them with a perfect entry, and then following through and not exiting too soon or too late. It doesn't get any better than that right there, guys. And you've heard me say it before, I get more excited about a good execution than I ever do about the money. We've had some big money trades in here. We've had some, $100,000 weeks in here. Those are great, but that flows from good execution.